You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. Welcome back to the Option Block, everyone's favorite. I know it's mine. Hopefully it's yours. Bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as, of course, some little thing we like to call the old Options Insider Radio Network. Quite a few fun programs for you guys to choose from on said network, including, of course, our latest edition, TWIFO, This Week in Futures Options. It's a fun little acronym to say. This Week in Futures Options, of course, breaks down all the fun and interesting activity we see across the broad spectrum of futures options and commodity-oriented products. You're talking your corns, your golds, your crude oils, your lean hogs, throw whatever is hot that week. 10-year, whatever is lighting it up that week, we're going to break it down. It's some pretty impressive detail with our friends over there at Quick Strike, getting into the call wing and the put ring of the skew and the strikes that are hot and all kinds of other fun stuff. Trying to bring a lot of the granularity we see on the equity and index options side of the fence over into the futures options side of the fence. If you guys have ever played on that side of the fence for any particular length of time, you know it's a little bit more opaque over there, a little bit harder to kind of see the forest for the trees there. And so we attempt to do that for you here. This Week in Futures Options. Of course, you can find that program as well as all of our other fine programs, the mothership, the flagship, theoptionsinsider.com. While you're there, of course, you can always find our other fine programs, including all of our archived episodes of this here program, The Option Block, and of course also via iTunes, TuneIn, Stitcher. Just got a notification as I was walking into the studio here to do the show that Google Play is live on my device here, which is an older Moto X here. So apparently they're still rolling it out for the podcast in the Google Play Store by device. So stay tuned to your Google device of choice, Android device of choice, and you will hopefully get that notification soon too. They like to roll things out in stages over there. So if you want to listen via Google Play and you haven't had a chance to, then probably the easiest thing to do is just go grab our app, the Options Insider Radio Network mobile app. Stop waiting around for Google to get off their butts, and we'll do it for you. Grab our mobile app. You can get all of our shows there, and it's available pretty much on every platform, every device of choice, including all 8 of you who have the Kindle Fire devices out there. All right, fun stuff going on the network these days. Speaking of which, going to be some fun stuff coming up soon. We're heading out to the big Options Industry Conference, so stay tuned to an explosion of content coming from us from that conference forthwith on the old network. It may cause us to have to preempt a show or two here. We're working on that. Probably Vol Views this Friday, but we haven't decided yet on that. So stay tuned for that. But in the meantime, we're going to make it up for you with all sorts of great interviews and, of course, all the panel content. So if you guys can't make it out to LA or you don't want to feel like hawking down for very expensive conference ticket out there in a very exclusive resort out there in LA, then you can just listen to our stuff, and we'll bring the whole conference to you. Speaking of bringing things to you, we are bringing to you our fellow all-star panelists. Starting off, let's go in order of proximity today. He's not as approximate as he usually is. He's not in studio, but he's not that far down the street here in the options mecca of Chicago. We are joined by the greasy meatball himself, Mr. Mark Sebastian, from his palatial corner estate by way of the Typhon offices over there. Mr. Greasy Meatball, welcome back to the program, sir.
Hey, good to be here. Wish the weather was a little nicer. It was a lot nicer yesterday. But, Happy Mother's Day to you, Mark. I know that it was your special day yesterday.
I am indeed quite the
I
doting
just wanted
mother.
to say a happy Mother's Day to you.
I am a beaming and proud mom here on the old show. Another proud mom joining us on the program is Auntie Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome to the program. To you as well.
Now, are we going to start talking about which bathrooms we go into next too? Because that's a road I really don't want to go down.
That's a landmine.
Yeah, I don't think we'll go there. Just I think to spare all of our listeners. So without further ado, let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, welcome to the Trading Block. This is indeed the portion of the program where we break down what was moving, what was shaking, what was rocking, what was rolling in today's market activity. And actually today, guys, I am completely lying. We're not going to do that at all. Instead, we're going to hijack this show for the most important story of the trading day, indeed the trading week. Disney's coming out tomorrow. Their earnings, I believe, before or after the bell. We'll have to check on that. So that means, of course, the biggest story to everyone's ears, hopefully you guys saw it, was indeed the epic film that is Captain America: Civil War. Did either of you guys have a chance to check it out this weekend? It is an epic film.
No, I'm gonna get to see it this weekend because my mother-in-law's in town, but I did not get to see it yet. I did watch Game of Thrones last night, though.
I haven't had a chance to check out on that one, probably because I was too busy running around catching up on my Captain America: Civil War. If you have any old school comic book love in you, if you have a little guy who's indeed so inclined, then it is indeed a fun. So therefore, I can't play up all which team are you on or any of that kind of fun stuff.
Yeah, no, because I'll ruin Game of Thrones for you. I will. You look out.
Yes, we're going to talk all spoilers, all episode here on nothing but Civil War. So when they killed off all those guys in Civil War, I was really impressed that they killed off like 80% of the people in the movie. I was stunned. I did not see that coming any way, shape, or form. I will say that it's a fun movie. Go check it out if you haven't done so already. That airport fight scene towards the end there alone, worth the price of admission in and of itself. Not too often you see a movie these days where you're like, that's worth the price of admission, but that movie, that was a fun one. That gets up, particularly if you have a little guy out there who is indeed a Marvel fan, or a big guy who's a Marvel fan. Go give them a chance to check it out. But Civil War aside, so there goes my well-laid plans to make this a all Civil War all the time episode. Civil War themed fun aside, maybe we'll start with you, Mr. Greasy Meatball. What caught your eye in today's market activity, sir?
I'll tell you what caught my eye was the lack of market activity. They just obliterated volatility premium. They took really everything down. Weekend adjusted VIX got absolutely smashed after really kind of having a rough Friday as well. We've got realized volatility slowing down. And you're getting some movement out of some of the financials, but that's about it. There's not a lot. I guess if there was anything exciting, it'd be oil, which absolutely did sell off today, and maybe needed to after getting a little overdone on this most recent rally. So that's kind of what I saw.
Uncle Mike, anything more scintillating catching your eye out there? Could be broad market, could be the fruit company, could be the Texas tea, could be the shiny stuff, could be something else, a new surprise you haven't seen. Maybe how excited you are to see Civil War. Whatever is catching your eye out there today, sir.
Oh man, we're struggling for material today, aren't we? No,
the shiny stuff I would say is the main thing that's catching my eye today. Gold got shellacked on pretty much across the board shellacking in the commodity world, with oil coming down like it has. And I really do think that that's as Mark was saying, that is, for me being the oil bull that I am at this point, I think that's kind of a healthy pullback, and that it was getting a little bit overheated. But overall in the stock market itself, there was really not a ton of movement. You mentioned the fruit company that moved a whopping 10 cents. And overall, this was definitely not a high BBI day by any means. Like my kidneys feel very functional, so we need to get some movement in this market.
Yeah, not a lot of stuff lighting it up on today's market activity. Of course, some interesting stuff has been cooking behind the scenes, as of course my machine does not want to play ball with me today at all. Of course, it has been the talk of the market for some time, the will they, won't they dance between a good old Staples and Office Depot, where we're supposed to have a decision coming in on that one. Actually, looks like by tomorrow, the 10th. So that could finally bring into stark relief exactly what's been going out there. We've seen a lot of merger arb going on out there, back and forth, people specking on it, both in the underlying and indeed in the options. In fact, I think our friends over there at Reuters had a write-up today about what they've been seeing out there as a result of this impending transaction going forth out there. They were talking about 30-day implied getting jacked up, which in both names, which I think is pretty much to be expected when you have such a major announcement coming forth. It's analogous to an earnings or any other type of event risk you might have in any other type of product like that, where you're going to see some sort of inflation elevation going into a name about that. I think they're pricing in, depending on where you're looking, the Staples, for example, pricing in, looks like about 18 to 20% going into this announcement. Again, a pretty stark move given that it's not an earnings, but it is a very important development. Of course, ADV is lighting it up as well, with most of the names doing well over their average daily volume out there, about 2x, if not more. Again, a lot of that coming in on the merger arb side of the fence. People betting it's going to go one way, people betting it's going to go the other way. So that's been one of the few interesting trades to kind of really catch our eye out there. Of course, also in the headlines realm as well, some of the big darlings, perhaps not so darling anymore, including in that company is the LendingClub. They're taking it on the chin, off about a quarter, about 25%, as a result of their CEO stepping down suddenly. Never a good sign for a company like that, perhaps implying that there's more to be uncovered out there and what's been going on out there as well. Of course, the gift that keeps on giving, Valeant, also out there rocking and rolling, let it move in almost 5% to the upside this time out there in Valeant as well. That thing just continues to rock and roll as it pushes it hither and yon. So this has been a lot for the savvy options trader to kind of pick and choose, even as earnings season does kind of wind down. Mr. Greasy Meatball, any of these names kind of lighting it up over there in the pit chat these days? And if not, what has been lighting it up in the pit chat these days?
We were looking around, and we were interested in Valeant. That was really interesting with Ackman and all the mess in their 10K today. We were kind of taking a look at Tesla because, despite the fact that they got 30 billion $1,000 orders, somehow the stock is down since the huge pop from their 30 billion pre-orders. It's almost like people don't believe that they can't fulfill their orders. And then beyond that, really more indexy stuff, just VIX and SPX and some things like that, where there still seems to be some opportunity. But that's really kind of what was on a day where things weren't lighting it up. That was the most lighting up that we saw, which was almost none.
It's interesting. Speaking of lighting it up, we've talked about this a lot on this program, also on volatility views as well. Kind of the Fed stirring up the pot, perhaps needlessly. Some might view, others perhaps viewing that as warranted. Starting in about Q3 or so of last year, and they started kind of, picking their head up out of the sand and saying, hey, we might do something here, and injecting a lot of froth and volatility out there into the marketplace. There's been a lot of back and forth about whether that's systemic, what's the actual driver, is that exacerbated by fewer liquidity providers in the marketplace, and a lot of other behind-the-scenes machinations go into and analyzing the impact of that right now. Well, we do have a little bit more data, it looks like, as our friends over there at Goldman never one to look askance at a research opportunity. They were looking into the impact of the Fed and the impending announcements and what's been going on with the Fed. And they kind of came to a conclusion that I think a lot of us here on the show have anecdotally drawn over the past 6 months, that indeed the Fed is perhaps moving markets more than it has in recent history. They say here they find evidence that markets are responding more to Fed communication in general, for example, based on monetary policy factors, the standard deviation of the market responses to the Fed decisions and speeches. That's an important part as well. The Fed speeches also move the markets these days. Has recently been somewhat larger than the pre-crisis norm. They say this could be taken as suggestive evidence of higher market sensitivity, and therefore more overall financial sensitivity to Fed policy. They also say it leaves them unpersuaded that this is going to be permanent. I think that's kind of another no-brainer. No one expects this to happen forever, but in the current regime we're in right now, we're coming off the heels of the better part of at least a half decade without any real changes in rates kind of being pretty much a dead sector of the market for the past 5 or so years, and now all of a sudden coming to life, springing to life over the better part of the last year. That certainly could probably account for some of this, but this kind of falls, I think, into perhaps the duh category, but at the same time, it's nice to see some data behind that. Mark, does this surprise you at all that Goldman comes out and puts some data behind something we've all kind of anecdotally assumed for some time? The Fed is stirring the pot a little bit these days.
Yeah, no, and it's nice that Goldman came out. Maybe the Fed will listen to Goldman, since they're all Goldman people. And we were talking about this on Vol Views, and between that and Brexit, that's maybe accounting for the weird distortion in the vol futures curve. And, this is a group of people who are supposed to be trying to reduce market volatility, and all they seem to be able to do is add to it. And it's a little frustrating sometimes.
It's funny you mentioned that they're supposed to reduce market volatility, because I'm sure if you ask them, a diehard group of economists and academics that they are, they'll say they don't give two Fs about market volatility. Some of them have come out in the past and very proudly stated they don't have a Bloomberg terminal on my desk or anything like that. They say they like to play the longer game, the more 10,000-foot perspective. But I think anyone with half a brain would look at their impact and perhaps say maybe they should start paying attention at some of this tail wagging the dog effect that they have on the marketplace. Uncle Mike, what are your thoughts here on some actual data saying the Fed is indeed stirring the pot these days?
Well, for them to say how they don't look at the day-to-day market data, I have a very hard time believing that, just based upon the recent actions.
I'm with you, Mike Tosaw. I think that they're full of baloney.
Yeah, I mean, just the fact that they were just so bent on raising rates more than what they have, and then all of a sudden they keep putting it off. And if the S&P were at 22 or 2,300 right now, I think that the Fed rate would be probably 2 points higher right now, just because they would have wanted to have raised it.
You mean two rate hikes higher, not like 2 points higher, right?
No, I could maybe not 2 points higher. Maybe 25 or 2,600. Then we'll give it 2 points. But either way, my point is that it would definitely be a lot higher right now. But the market's been relatively flat for the last year and a half, so it seems like the Fed's waiting for the market to do something like what we're doing in a way. So I really think that it wouldn't surprise me if Janet Yellen is looking at real-time quotes of the S&P herself.
Speaking of some nuggets from our chat room here, Mark, our good buddy, Mr. Schwartz from Trade Alert chiming in with some data. He is indeed the man with the data. If you haven't done so, listeners, check him out on our Trading Tech Talk program. Today, according to our friends over there at Trade Alert, the second slowest day of 2016. So this just shows the lengths we will go to, listeners, to find some content for you guys on Henry elbowing his way into our program yet again. But, some good nuggets over there. Speaking of nuggets, it's time for something that's up Henry's sleeve, because it's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
right, everybody. That funky tune means it's time once again for the Odd Block, the portion of the show where we peer into the wild, the woolly, the unseemly, not fit for children part of the options market, where we attempt to divine what some of these weird trades and what some of these weird traders are actually up to out here. Going to kick things off with, I believe, a newcomer to the Odd Block. I certainly don't recall talking about this one anytime recently anyway. This is that market mover of market movers, ACAS, American Capital Limited, ticker symbol ACAS. Closing today, $15.81 off, a little over 1%, about 20 cents or so in today's market activity. This thing was lighting it up, though, from an options activity perspective. This thing's averaging about 3,200 contracts a day, so from an odd block perspective, that's pretty robust. We usually talk names here that are doing 200-300 contracts a day on average, so that's a pretty heavy volume name to begin with from an odd block perspective. Today, doing 42, almost 43,000 contracts out there, about 26-1 calls over puts. That'll give you pretty much some idea of what caught our eye out here, listeners. It was, again, this is that time of year, that season, call it what you will, when people seem to want to roll and roll for size, and they were up to it yet again out here, up to their old tricks in good old ACAS. What caught our eye today was, looks like the May 17, June 16 roll. Paper coming in when we first saw this, actually looks like that was about the sum total of it, about selling about 20,000 of the May 17 calls, blasting those out for about 11 cents, then turning around and gobbling up about 16,000 of the June 16s for about 5/8, 62.5 cents there, listeners. Not the old up and out, but instead the old out and down, which is kind of interesting in and of itself. The open interest on both of these strikes showing that is probably a roll, about 36,000 open on the Mays and about 13,000 decent size open on the Junes. Looks like there might have been a vertical one up there as well. Looks like maybe the 16, 19 up there. Not today, but recently in the past here. So our friend here deciding he still wants to keep a little bit of his bullish love, but no surprise with the recent sell-off out here in ACAS. Perhaps deciding he wants to get a little bit closer to the fire, a little bit more relevant strike, and is willing to give up a little bit of size to do just that, given the recent history out here in good old ACAS, ever since the dark days of mid-February, when it seems like everything was pretty much at its nadir out there. This name was trading right around the 12 handle. Since then, it's pretty much been straight up to close to the 16 range, coming off those 16 highs recently. But our friend here deciding he wants to get that ever so precious 16 strike and is willing to give up a little bit of size to do it. Let's start there, Mr. Greasiest of Greasy Meatball. What's your take here on yet another roll? This time not out and up, but out and down, and for a little bit less size here in ACAS.
I think they wanted exposure to the underlying, and with that May contract, and this is not the most volatile stock, with that May contract so cheap, the only way to do that was to buy inexpensive, to sell the inexpensive contract and roll down to the more expensive contract, if you will.
That does seem indeed to be the case. Not a lot of options. And again, pun intended, of course. And he saw an opportunity to get a little bit more relevant strike and a little bit more time to boot, and decided to channel my best Canadian to boot, and decided to do just that. Speaking of Canadians and all things ever bullish, that we're talking here, moving on to our next name. This is one we haven't talked about in quite some time here on the old program, but raising their old head yet again. This is Nokia, ticker symbol NOK, N-O-K. This one right about $5.70, pretty much unched on the day. If you're familiar with this name, they know they've had some interesting history going back and forth with their deal with Microsoft. This name averaging about 4,000 contracts a day, doing about 22, almost 23,000 contracts today, about 20-1 again. Calls over puts. This one a little bit funky as well, hence its inclusion in the old odd block today, listeners. You saw, again, another time component to it, but not so much a roll as it was indeed. It looks like a time stupid. So, Uncle Mike, perk up your ears. This one will indeed excite you. What caught our eye out here looks like the May 6th, May 6th and June 6th. So, June 6th. Time, let's call it a time stupid, because that's a fun name for any sort of trade. We saw paper coming in, starting off buying about 10,000 of the May 6th calls, and starting off about 4,000 of the June 6th calls. Looks like almost 5,000 total going up on the June strike, and about 12,000 and change going up on the May strike. It's also worth noting that the weekly May 6th is expiring on the 13th, so very shortly. Also had about 3,300 contracts going up today. So the 6th strike is the strike du jour out there in good old Nokia. Again, almost about 20,000 upside calls going up total out here in good old Nokia. Very timely paper, particularly that weekly kind, because indeed earnings are lurking. In fact, hopefully you got your trading on and your positioning on, because it's before the open tomorrow. These guys are clearly looking for some aggressive upside in good old Nokia coming out post earnings. Looking back on the year that was for Nokia, particularly again back in the doldrums of late January or early February, this thing was getting clipped. Got clipped pretty aggressively from about the 7 handle down to about where it's trading right around now. Since has been vacillating around this level ever since. Our friend here, or perhaps friends, deciding that Nokia's got a little bit of upside, about 10% or so in the near future. Mr. Greasy Meatball, I almost called you Mr. Rock last year. Mr. Greasy Meatball, what's your take here on this bullish love for Nokia?
Yeah, you gotta love call sweepers, and they've got Nokia's earnings this week, and clearly somebody thinks that this $5 stock should be, $6 or $6.25, because they're all buying at levels where, a small little rally of 40 to 50 cents, and these calls do really well.
If you think of names that are poised to make aggressive moves in the near term, I think you probably could name a lot of other names off the top of your head before Nokia came to top of mind. When was the last time Nokia popped up in the pitch chat, Mr. Rock Lobster, aside from today, if it did indeed today?
I'm not the Rock Lobster. Stop calling me Rock Lobster.
It's seeped into my head. It's too late. You can't escape.
Do I sound like, well, let me tell you.
You sound like a diehard libertarian from Maine.
I saw. My name is Andrew. No, I'm kidding. You know what? We don't talk Nokia very much. I don't think a lot of people talk Nokia. It used to be a huge stock to trade. It was a big deal back in the day. Not so much anymore.
Uncle Mike, this one raised the hackles on the back of your neck. I know you hear time stupid. You hear anything stupid on this show, and you get a little excited. What are your thoughts on gobbling up some time stupids ahead of earnings here? It could be Nokia. It could be in any name. Maybe our friend here just gave you a nice subject for the strategy block later. I don't want to infringe upon you, but perhaps he's giving you inspiration.
Right. I'm not a fan of the time stupid. If I were to do a stupid, I guess I'm more of a vertical stupid kind of guy. As we've talked, debated, and discussed with much spirit on this show many times through the years, but not a fan. I mean, if anything, I'm just looking at these two prices. I would probably rather do a calendar spread on this and buy the June and sell the May. It's 3 cents, but the reality of it is this is such a small stock. I really don't like making option trades for 3 pennies. So even if this was a stupid with which I approved, I would not approve of doing something like this on a stock that's not that highly priced. I think I'd rather just buy the stock, pay a little bit more for it. And like the Viceroy would always say, just buy the stock when they're this cheap.
Yeah, this one is certainly a candidate for the stock as option contender on the show today, because the next one, our last one here in the odd block, a little bit richer, certainly when compared to Nokia. This is JPMorgan Alerian MLP Index ETN. Try saying that 5 times fast. Ticker symbol AMJ, closing today $29.18, off about 1.5% or close to it percent on the day. This is the name that does about 7,600 contracts a day. So again, talking some little bit more active names in the old odd block today. None of our 300 contract $3 biotechs like we like to talk about here as well on the old show. Today doing about 12,000, about 11 to 1 puts over calls. That should give you some inclination of what caught our eye out here, listeners. And in particular, a bit of a funky one, Mr. Greasiest of Greasy Meatballs. Seems like we got looks like it might be related paper, but then maybe on further parsing, perhaps one bit of paper inspired the other. What first started catching our eye was someone coming in deciding to blast out a couple of blocks of the May 28 puts, doing at least the initial kind for about 35 cents, doing it total of about 4,300 contracts on that strike. That's on open interest of just 1,200 contracts. So clearly opening paper there. Then a little bit later, and what looks to be very, seems, I don't believe in coincidences too often. The May 27.30 put spread goes up. Looks like paper buying, paying $1 to do that about 3,100 times, buying the 30s, selling the 27s. So you might think, hey, maybe he thought the better of it and decided perhaps to put another spread around this or something else like that. But it appears to be different traders. One guy looking at this and saying, no, I kind of like this. Maybe I want to do it a little bit differently, though. Or kind of like what we saw a few weeks back, whenever the big size VIX trader comes in, people like to find other ways to do their 1x2. This guy, though, having a bit of a different way to do it, deciding to do it spread form and selling the 27 strike instead of the 28 strike, and happy for a little bit of downside instead of our friend who liked to draw the line for size at the 28 strike. Also interesting, worthy of note, there's some decent open interest on both the 27 and the 30 strike here, about 6,500 on the May puts, the 27 puts, and about 4,000 on the May 30 puts. So it does add perhaps the extra wrinkle of our second friend perhaps coming in and deciding to close. So Mr. Greasiest of Greasy Meatballs, where do you fall on this? One customer having a secondary type of event, or perhaps a second person who was inspired by the first? And also, do you think the latter kind is perhaps closing, or do you think it's additive paper? Where do you fall on these two contentious issues?
Well, I think the 28s are definitely just a straight put sale. But if you think about the fact that AMJ is trading $29, if you're long the stock and you have this on, it kind of converts it into kind of a short put, long call risk reversal. And so, I think both are kind of bullish. The underlying, just, two different ways of doing it. And I think my guess is that the put spread buyer also owns a lot of stock and has a level that he's willing to also get short at, or get long more of the stock. So that was kind of what I was viewing as, one guy trying to collect some premium, maybe get the long the stock, the other guy already long the stock and trying to come up with a way to cheaply trade it, to put on a near-term hedge. But either way, I liked both of them as bullish.
Interesting stuff. We'll pay attention to good old AMJ to see how this one plays out. Again, this is an ETN, so no big events appear to be lurking on the surface. We'll keep an eye on this paper and see if indeed tomorrow, of course, we'll see if that's closing, and we'll see how our friends here, our two friends, how they fare going forward. Meanwhile, it's time for us to keep going forward with the show. It's Monday. That means it's Uncle Mike time. It's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody, welcome to the Strategy Block. This is indeed the portion of the show where Uncle Mike breaks down some options, wit, wisdom, analysis, hilarity, maybe some movie reviews, whatever he feels like breaking down this particular week. Uncle Mike, you missed the big movie of the week, so let's break down some options strategy instead. What do you have in store for our listeners this week, sir?
Long-dated covered call writing. And in reality, we should come up with a movie about option trading. There's been books, there's been seminars, there's been podcasts, there's been all sorts of things, but we've never seen a fictional movie on option trading. What do you guys think? Let's do this.
There's a couple of bad ones out there. There's, of course, the Rogue Trader one with Ewan McGregor, where he's playing the Bearings guy. There's, of course, Quicksilver, which is on the P Coast. One of my favorite scenes ever, where he strolls into the pit on a visitor's badge and begins slinging size on earnings day. That's one of my favorite scenes ever in the history of film. And then, of course, there's also Trading Places. They trade good old FCOJ options and futures.
But that's not option trading, though.
Yeah, I think there's mostly futures in that one. If you want fun aside, go watch Trading Places again. Watch Eddie Murphy when he's trading in the pit. He has no idea what he's doing. It is laughable and quite fun if you've ever stood in a trading pit for 5 minutes to watch Eddie Murphy. He's even admitted in some commentary on that movie, I have no effing idea what the heck I'm doing out there. They didn't tell me, I just went with it. So it's pretty funny in and of itself. Not to sidetrack your segment, sir, with talk of Trading Places, but I think we can always talk Trading Places on this show. That's a good movie.
Of course, by all means. I mean, yeah. But
turn
anyway,
those machines back on.
There you go. But with that in mind, once we make our specific option trading movie to where it's filmed live at the option block headquarters, I want to talk about long-dated covered calls today. And so right now, I don't know if it's necessarily the ideal market to be doing this in, but I want to put a little nugget out there for our listeners to think about, because when volatility does come back, this is something with which I think might not be a bad idea to consider. Should it ever come back, you never know. Let's say that you have a dividend-paying stock, and these are just for more longer-term holdings to where maybe you're looking to beat the market by a couple percentage points with the stock, and you're thinking that you want to maybe collect a dividend on the holding, and you're not necessarily looking to tear the world apart with this. This is just something with which you're looking to have as a good long-term holding, perhaps some Dow stocks, maybe something like a McDonald's, maybe something like a Microsoft, who knows, something blue chippy, so to speak. And what I want to propose for our listeners to look at once volatility comes back a little bit more would be to do an out-of-the-money, long-dated covered call, perhaps maybe even 6 months, perhaps even a year. And the reason that I'd like to mention that is for a couple of things. First off, if the stock stays the same or goes down, it's something that you're going to be holding anyway throughout the year. Well, you're obviously going to create a benefit from doing that because of the fact that in theory, the covered call would lose value. And let's say you just let it expire worthless. Well, you're better off for doing that. Second reason would be along the lines of possibly having a little bit of downside protection. Now, I always get weary when I hear people say downside protection and covered call in the same sentence. It's not true downside protection. It is a Band-Aid. The way with which I describe covered calls as a hedge is that if you have a paper cut, the remedy for it is a Band-Aid. So just like if a stock were to go from, say, $122 a share to $120 a share, that's a paper cut in the stock. And a Band-Aid is a wonderful thing. Covered call can act as a Band-Aid. So if you're concerned with the stock getting a quote-unquote paper cut, then a covered call can be a nice little tool to have on board. It's nice to have that. It's a little bit of short premium in your pocket for a rainy day, and that's your rainy day with that paper cut. Now, with that, if the stock goes from $122 to $65 a share, well, that's not a paper cut, that's a severed jugular. And if that's the case, then the Band-Aid will do you absolutely no good. You need something more appropriate if you're concerned with the stock going down that far, and that would be a protective put, with which you would perhaps use a collar strategy or a protective put, something along those lines, which is not what we're talking about today. So what I want to mention is you have a portfolio of stocks, if you do, and you want to have a little bit more income on it, say, to perhaps beat the market. Maybe if you can go 10% out of the money on the stock, if XYZ stock is at 50 and at the 55 level, well, maybe you can get $1 or $2 for a covered call a year out. I say that's something with which to consider. And if you have, if it's just 100 shares, probably not. But let's say you have maybe 600 or 700 shares of that stock allocated, then perhaps maybe do 1 to 3 covered calls on it. Once again, the reason is that if it does go that high, it's a similar concept of any covered call. If you get called away, you've made your maximum profit and you're happy. If it's above where you want your maximum profit to be, and the premium there is desirable for you, then I think that's something with which it makes sense to do. Once again, not with all your holdings, because let's say that stock were to go from 50 to 82, you don't want to get called out at 55, but let's say that the stock does go from maybe 50 to 54, and your target's 55 anyway. Well, if that's the case, then I say by all means do it. Now, the final thing that I want to mention with that is that if for some reason in this scenario, the 55 calls are theoretically trading at, say, a nickel, 20 cents or something like that, then I say don't bother. It's not worth your time to even think about it. Not only is it a poor amount of premium to take in, but the time it takes you and the mental energy it's going to take you to deal with that premium or just to think about it, it's not worth it. So I say that if you get a decent amount of premium 1 year out and it's out of the money far enough and even perhaps above your target, then I think selling a covered call 1 year out is something with which to consider. Once again, there's some that I have in my portfolio right now, but these are kind of exceptions and not the rule. I would say probably less than 0.1% of the assets with which I manage have this going right now. But if volatility were to come back, and just throwing out a number, shooting from the hip, if the VIX were to come back to, say, the 20 level, this is something with which I would definitely take a look at. But it doesn't seem like it's going to be doing that anytime soon, but you never know. If all of a sudden we have a couple of crazy things happen, we have a 22 VIX, and the stocks with which you're holding are still around the levels with which you like them, then it's something with which to take a look at should we get an event like that. So with that, that is the strategy for today, May 9th, post-Mother's Day.
And Uncle Mike, while you were talking, you did indeed inspire me. We were debating what our options question of the week should be. You guys know over there at Options on Twitter, we post our question of the week every week, all kinds of fun things. We've been talking a lot of earnings stuff, having some fun straddle battles and all sorts of fun things. Well, as Uncle Mike was talking, we just posted, he inspired our question of the week, which is, what is your favorite options trading film? We gave you 3 choices there. Trading Places, one we just mentioned, Rogue Trader, and Quicksilver. We also gave you an opportunity to add in your own name if we did forget one, so other number 4. I'm looking forward to see what you guys come up with there. Uncle Mike and Mr. Rockloss, or excuse me, Mr. Greasy Meatball, should make your voices heard as well via the poll. We just went live, so the votes are going to start coming in a few minutes. Meanwhile, we're going to keep on rolling. It is Monday, so we'll keep on rolling right on into our own version of the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, right now it's a hot and heavy race of just the early votes coming in between Trading Places and Quicksilver. We'll see how that unfolds as the show goes on. Hopefully we'll have some sort of consensus in the next 15 or so minutes. And we give you a whole week to vote, listeners, so we don't expect the battle to be won anytime soon, but it is fun nonetheless. Speaking of battles, we did, Disney is coming out with earnings this week. We did a fun little impromptu question of the weekend this week. We asked our listeners, our audience out there, which team are they on? Team Cap or Team Iron Man? Inspired, of course, by the epic battle known as Civil War. Maybe some options trading in that film, too. I should have put the Dark Knight because Dark Knight Rises, don't they attack? It's a stock exchange, and they may mention some options in there. I'm kind of stretching at this point, but there's not many films that feature options in any capacity. Actually, I think in that film, they're trying, for some reason, they break into a stock exchange to sell futures on Wayne Enterprises, which is always a dubious act in and of itself. So maybe that counts by the transitive property because they mentioned futures. But that said, I asked Team Cap or Team Iron Man. Uncle Mike, who do you think won? Go.
I will go with Iron Man.
Mr. Greasy Meatball, who do you think won?
You know, they trade a bunch of put options.
Do they buy puts in the Dark Knight?
Yeah, it involves the selling of all sorts of crazy out of the money puts.
I thought they were selling futures on Wayne Enterprise. I have to go watch it again.
No, it was puts. is put, so it was actually option trades.
Oh, well, there we go. I now have to write in. I have to have a write-in campaign for The Dark Knight Rises, the best options trading film of all time. That'll show you just how far we have to stretch. Oh, yeah, Wall Street. I forgot about Wall Street. That's why we're getting people. That's why I love you guys. You guys chime in and remind me. Yeah, they do mention, I think on Blue Star, one of those, he says we're going to buy some stock and some call options. So it does work its way. You have to listen hard in most of these movies to find it, listeners. Oh, and what's your vote, Uncle Mr. Greasy Meatball? Who do you think won? Team Cap, Team Iron?
I'm not answering this question until I see the movie next week.
Who do you think won?
Who
do you think won from our listeners, our audience?
Oh, from our audience? I'm going to say Team Cap.
Well, our listeners financially minded. They may side with a billionaire like Tony Stark. They did indeed. I'm glad to see our audience is such a smart crew. 71% picking Team Iron Man. That brought a smile to my face because I was indeed always been a big Iron Man fan. All right, moving on to more options related stuff. We're not going to be able, I'm not sure. Actually, you guys are going to be doing a show on Thursday. I will be traveling, so I'm not sure how many questions we'll get to. See if we can get to at least a couple today to sate your ever-growing question lust here on the old network. Let's see here. Let's see if we can hit a couple really quickly. This one comes from 777s, he writes, or perhaps she. Have I heard any rumors that the CME or the CBOE will be acquired by a bank or insurance company? The latter is kind of interesting. The notion of an insurance company buying something like the CBOE, I think, is kind of intriguing on a theoretical level. They are indeed the end users, the end purchasers of a lot of the longer-term volatility out there, the VIX products, futures and options, as well as, of course, S&P. They, of course, are heavily selling a lot of the longer portion of the curves. They come on to the listed venues to buy a lot of that back. They also trade a lot of it OTC as well. So that might be kind of interesting for one of them to come buy up the venue upon which they are trading a lot of long-term volatility. I don't really see the utility for it themselves unless they give themselves some sort of internal write-down for commissions or something along those lines. Or maybe they were just inspired by seeing all the volume. We do see some talk every now and then of a name like a CBOE that's so heavily volatility-oriented, kind of being a bit of a recession downturn play because market sells off. Volatility, of course, a bias to the downside. You might expect VIX volume to pop. Might be a good time for the CBOE. So we see a lot of names and analysts banding them about in that kind of discussion. And of course, they popped up ever so briefly in that CME CBOT deal a few years back and joining forces with ICE to try to pick up the CBOT. That didn't, of course, happen. We haven't seen much talk since then. And CME is just such a juggernaut. They have to have such deep pockets to come in and want to pick something like that up that I haven't heard any notions of the latter. But I don't know, Mark. I think that'd be kind of interesting, wouldn't it? A large insurance firm coming in and gobbling up something like the CBOE. What would that do to the long-term VIX futures curve?
It'd be interesting. I'll tell you that much. That's for sure. I don't see that happening, but it would certainly be interesting.
Yeah, that's why I like our listeners. They throw us some interesting curveballs. I would like to see what happens there as well. And I'm joking, of course. I don't think it would change the curve that much, but it'd be kind of fun to watch and see why they would pick up a name like that. Let's see. You got time for one or two more here. Here's kind of a this one looks like it's a bit of a thought question. This might be a good one here. If I see it, this is from SkyTrader. If I see a trend, what spread works best for capturing that? I think he meant trend. For capturing that trend, a straight vertical or a calendar. So he doesn't give us a lot to work with here. Trend could imply a lot of things. Trend typically implies a little bit longer term, though, than just intraday. You're not going to see an intraday trend. You don't typically refer to them as that. I mean, that could be if you're a very short-term time horizon, I suppose. But typically, trend implies longer term. Also implies typically, to my connotation, maybe Mark and Mike, you guys disagree. To my connotation, also implies a bit of a slower, more kind of languid move in one direction or the other. So, in that type of scenario, it makes it interesting to discuss. Straight up vertical, kind of more for your kind of rapid bang, kind of here we go, something's going on right now, let's get in there. Versus your vertical, your calendar, which you talked about before. Long and short, you have that nice dance between Vega and Gamma going on. If you sell a lot of front month stuff in the calendar, obviously a very, very whipsaw kind of move is going to be dangerous for you. And vice versa, if you're selling, Uncle Mike, you didn't get a chance to weigh in on the bank buying the insurance provider buying the CBOE. So I'll give you a chance to chime in on this one. In general, trend, kind of longer term, slow, languid type of movement. What's your preferred play, straight up vertical or calendar?
I'd prefer to do a calendar with a giant asterisk on it if the volatility matches up to it. Typically, if it's a lower volatility environment, meaning that if it's volatility that I think is going to go higher, that's how I define it as low volatility. Or if it's volatility that I think is going to go lower, then I think it's high volatility. But if it's something that I deem as a lower volatility environment, then I think a calendar is a better way to go. But if it's something that's a higher volatility environment, then I'd probably feel a little bit better with a vertical. I've used both for that type of a scenario. I've used both and will continue to use both, but I think it's more of a question about volatility and what the market's giving you with volatility as opposed to either or. I'd prefer to use a calendar just because it's usually less risk on the table, but in terms of dollar amount with the delta bang for your buck. But, or at least in my experience, it has been anyway. But once again, the volatility stars have to be aligned, so to speak.
Mr. Greasy Meatball, do you concur? And do you concur that a trend is a long, slow movement in one direction, or do you have a different reading of this question?
I mean, I think through, yeah, I agree. There is, I think Mike's, I think we got it.
I love when you get the better of yourself mid question. always fun. Our listeners firing off. We'll get some more updates here as we go on your favorite movies here. As we move on into our final segment, it's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, in this hot, contentious debate, so far a handful of votes coming in already, and we got Trading Places winning 75% to good old Quicksilver getting one vote. There must be a Pecos guy floating around out there. I knew a couple of guys who were old school Pecos guys who were down there when they filmed that movie with Kevin Bacon, and I heard some fun stories about how all that went down. Clearly, they didn't do a lot of research into how things work on an exchange. Go watch that movie again if you haven't, listeners. I think he's the bike messenger. Then he goes back to the exchange and he just walks in on the day of earnings, I believe, and just starts slinging stuff on like a stick-on visitor's badge. It was priceless to behold. Speaking of other priceless things, we're coming up on kind of the tail end of some interesting earnings. We do have some names coming out tomorrow, though. EA, good old Electronic Arts, for those of you out there active in the gaming side of the trading space. Also, like I mentioned, good old Disney, Diz. Some interesting stuff, of course. They're lighting it up right now in terms of from the Cineplex, the number 1, number 2 movies right now, of course, being Civil War and indeed Jungle Book. We'll see if their dominance in the theaters, again, that's late in the quarter, so probably won't be that material to this number, but it will help maybe with some guidance going forward. Looks like they're pricing in about a $2.40 or so move. Of course, it's after the market closed tomorrow, so that could change right now. Disney hovering right around 105 right now, so it's a little bit about 2%, a little more than 2% move that they're pricing in right now. Interesting to see, of course, the big question mark hanging over the head of Disney is how will the ESPN and the whole cord cutting continue to affect them, or if gains in places like the parks and in places like, of course, the movie theaters and everything else, and the toys and everything else that goes along with it, if that kind of stuff will outstrip any losses they may have in good old ESPN. Well, tomorrow we'll see. Out there in Diz, we also got Kohl's coming up later this week. Macy's and Wendy's on Wednesday, easy to say, and JCPenney, that market bellwether, on Friday. Aside from that, let's turn to Uncle Mike. What are you watching for the rest of this week, sir?
Well, there's, like you said, we have the tail end of earnings with Disney. The other thing to add to that, I'm curious to see what's going on. I believe the new Shanghai Disney is going to be coming out pretty soon. So I think that would kind of be an interesting thing to see, and hoping for their benefit that it's not another Euro Disney. I remember Back when the Buffalo Bills were losing their Super Bowls, that was one of the things that was one of the big jokes. They'd say, Jim Kelly would come out and say, I'm going to Euro Disney. It's like something that you didn't really want to go to. But I think I'm curious to see that. It's not necessarily something that's coming up in the next couple days, but in general, I am hoping that we can get a little bit more of a pullback in gold. I would love to start selling some puts on it and get back into it. But aside from that, just continuing to watch SPY just be magnetized to that 205 level, or the S&P at that 2050 level. And it's the same thing every day. So that's what I'm watching right now.
Your life is naught but repetition, sir. And of course, high BBIs. Mr. Greasy Meatball was catching your eye over there in the land of the pit, sir.
You know, I think we're going to have a week of more of the same. It might be a little, might not be the most exciting week to be alive as a trader, but don't worry, things will go back to normal eventually.
Not the most exciting week to be alive. Well, on that somewhat grim note, listeners, we shall bring to a close this Civil War themed episode of the Option Block. Did you see it? Let us know. Let us know what team you're in. You missed the vote for this past weekend, but you can let us know your thoughts anyway, which team you're on. I guess I know which way Greasy Meatball will flow. I don't know which way Uncle Mike will go. He seems like more of a team cap guy to me. Red, white, and blue and all that fun stuff. Of course, before we go, and again, chime in on our poll, our options question of the week, the movie poll. We want to know what you guys have to think, because we're already seeing a bunch of names that we forgot already coming through, like Wall Street and others. So I'm sure you guys will have a lot of other great nuggets for us coming. That'll go through the end of the week. So make your voices heard there at twitter.com/options. And before we go, let's check back in with my cohorts here on the old All-Star panel. Let's start in the land of greasy things. Mr. Greasy Meatball, what's cooking in the land of Carmen Line and the Pit?
You know, we just had another great webinar this week. It was a really fun presentation. We're really happy with how that whole thing went, and you know, all things are excellent. Go to our blog, read our blog every day.
So you may not be happy to be alive, but all things are excellent. Some mixed metaphors, some conflicting messages there, sir. We'll get you sorted out in time for the next show. And Mr. Uncle Mike, what is cooking in the land of all things RCM alts?
All sorts of things going on. First off, check out my Facebook page and go long, new option strategies for buy and hold investors. Go ahead and like that. It's nice to be liked. You always like getting liked. The other thing, if you are interested in someone managing your money in any way, shape, or form, someone from the option world, so to speak, give me a call or send me an email. 312-212-3531 or mtosaw@rcmfs.com.
Look at you getting all up with the social media, Go Long Facebook page. We'll have to check that out and give you a nice like or two, sir. That will
For sure.
That will be a fun thing. So there you go, listeners. Check him out over there on Facebook. Just search for Go Long, or I'm sure Mike's got maybe a link or something there on his personal page that he can refer to you there as well. And, of course, make your voices heard on the old Twitter question of the week. And stay tuned to the Options Insider Radio Network. We're heading out to the big Options Industry Conference tomorrow. It starts on Wednesday, and we'll be producing a lot of content from there, our usual explosion of interviews, content, discussions, debates with all the heads of the different exchanges and brokerage firms and trading firms and all sorts of other things, vendors, etc. Also have all the panel content coming to you from the conference. You don't have to go all the way out to LA. Just stay tuned to us. And, of course, also my panel talking about all things fintech and startups and all things fun. We're bringing that to you as well. So stay tuned to the network over the coming week or two. We'll have all that coming out for you. In the meantime, we'll see you next time right here on Thursday for more of the Option Block.
preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.